Good morning. Welcome to Stock Market Today. It's Monday, July 6th, 2020. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com /today, where you can sign up for a free email where we get a lot of the content for this show. Also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So I hope everybody had a great long weekend. Let's get back into the swing on Monday morning. First, quick recap of Thursday afternoon trading. U.S. equities closed higher, but off the best levels of the day. The theme in the market remains largely unchanged as better than feared economic reports are overshadowing the continued rise of COVID-19 cases in the U.S. Treasuries were unchanged to stronger at the short end of the curve. Dollar was stronger on the major crosses. Gold finished up 60 basis points. WTI Crude up about 2%. Your outperforming sectors, materials, energy, and industrials. Your underperformers, REITs, comm services, and financials. As we get to the desk this morning, futures are higher. S&P futures up 1.2%. After that rally last week. Asian markets higher overnight, led by China, which was up nearly 6%, its biggest one-day gain since 2015. Hong Kong up nearly 4%. Japan, Taiwan, and South Korea also doing well. European markets are seeing strong gains. Treasuries are mostly weaker with the curve steepening. The dollar is stronger against the yen, but weaker against the euro and sterling. Gold down 30 bips. WTI Crude is up 30 basis points to kick us off on a Monday morning after the holiday shortened week ended with a rally to resistance and then a fade, very similar to what's been playing out for the past couple of weeks here. They will try again today because futures are pushing higher this morning. Support 3,000 to 3,100. The song remains the same. Below that, 28.50 to 29.50. The February highs are in play as support continues to hold. Take a look now as the 50-day moving average continues to crawl up into the support zone as well, just kind of strengthening this area around 3,000. Right, so what does that tell you? Number one, that's obviously an important area, right? We continue to hold it, which we have been, which we've been talking about. Then the highs are in play. But think of the significance if it breaks. I'm not saying it's going to happen, but what is your game plan if 3,000 gives way? You should know that now, right? With the market at 3130 and the significance of 3,000, you should know what your game plan is should 3,000 break to the downside, right? Resistance to the upside, 3150, 3250. You should also have a game plan for those levels giving way. We've left oversold conditions and we're working higher based on this 13-period CCI. And Chaikin money flow continues to fade, actually dipping ever so slightly into the negative territory with the close on Thursday near the low of the day. So from a structural standpoint, not a ton has changed here, right? We're still in this consolidation, support and resistance clearly delineated, and you should have your game plan for if this, then that. If 3,000 breaks, what are you doing? If 3,250 or 3,200 to the upside breaks, what are you doing? You should know that now, right? Those are not decisions you should be making in the moment, right? When that moment comes, you should just be implementing the plan that you've laid out today, right? So what are we talking about? Our market in a minute. What are we writing about in the note today? Well, stocks rally to close the holiday week. We hit on that. The Qs trade to a new all-time high. And we're going to look at a chart actually of Chinese tech, something we've talked about here and there on this show and in our notes to illustrate the fact that the growth theme is pervasive globally. Commodities are on the verge of a breakout, new highs for gold as oil tests key resistance. Futures, as I said, do point to a higher open here today. Now, major indices from a power bar perspective, not a lot of change really. The Dow still skewed to the negative side, 3 to 7, despite a 43 basis point rally. On Thursday, S&P 500 up 0.5%, 97 to 103, bulls to bears there. NASDAQ slight outperformer, 35 to 10, bulls bears. Small caps and slight underperformer, but still positively skewed from a power bar perspective for small caps, 556 to 294. Bonds uptick slightly. Materials had a good day, up nearly 2%, 7 bulls to 0 bears for the materials, which is one of the areas that I like should we start to see increasing inflation? Should we start to see inflation rising while growth continues to slow, a stagflation type environment? Materials actually look okay to me. According to the Chaikin Power Bar, small cap stocks are more bullish than large cap stocks. Major markets across the board, however, are mixed. Let's hit our stock of the day now, sticking with the growth theme, sticking with the areas of the market that continue to show relative strength, right? Software is a group that we've liked a lot. We've talked about it. We've pounded the table on it. And within software, we want to identify key stocks that are continuing to outperform. So take a look at a name like Autodesk, ADSK, with a bullish rating, strong trend, strong industry group as it consolidates above a rising long-term trend line. Overbought, oversold indicator moving higher in an oversold condition. So what do we see here? Bullish stock outperforming since November, and the intensity of outperformance remaining strong. Oversold with bullish money flow. That's the setup, right? To me, that's the setup that you're looking for bullish ideas, right? If you're looking for an opportunity on the bullish side of the coin, I'm featuring Autodesk in my note today. I'm featuring it here on this show. These are the types of names that we want to look at. Are they guaranteed to work? No, nothing's guaranteed to work. Anyone who tells you that they have a system that's guaranteed to work is a flat out liar. But probabilities favor Autodesk continuing to outperform the market. So if you institute this idea with a solid risk management process, your odds of outperforming to me are favorable. So Autodesk looks compelling to me. Take a look at it as a bullish idea within your framework and by overlaying your risk management process. Let's look at what's trending now from a sector standpoint, our sector movement over the last 5 days. There's your materials. You've heard me talk about them on and off over the past month or so as one of the kind of rotation groups that I like. Also seeing REITs and utilities at the top of the list, which is kind of interesting, considering the strength in the market last week. Healthcare was a group that we started pointing out as testing important relative support. Stay tuned tomorrow, right? My note will have Tuesday's relative strength and sector rotation work, right? So we'll dig deeper on that. Middle of the road, industrials, discretionary, and tech. Bottom of the list, staples and comms are up, but underperforming. Energy and financials are down and underperforming. More of the same, right? Those are enduring themes. Underperformance on the part of energy, underperformance on the part of financials. Those are not new themes. Those are themes that just appear to be reasserting something that might make sense to take a look at. So I think that in an environment where fiscal and monetary stimulus have the potential to create inflation for the first time in a while, or meaningful inflation for the first time in a while, right? I think it's not going to be surprising to see REITs towards the top of the list, right? I wouldn't be surprised to see energy turn. I'm not there yet, but it's something I'm keeping an eye on, right? So our industry in focus today is real estate services, the Dow Jones REIT Services ETF, RWR, which has underperformed by 17% over the past 6 months and has a weak power bar ratio with only 13 bulls for 21 bears. Currently ranks at number 16 of 21 subsectors. Some of the names there that have very bearish ratings: SL Green, SLG, Universal Health, UHT, and Essex Properties, ESS, all with very bearish Chaikin power gauge ratings at the stock level as holdings of a fund that have a bearish ETF rating and a weak trend below this declining long-term trend line. Now we've seen some stabilization here, right, but not enough yet to get me excited considering the way the evidence supports this group continuing to underperform. However, it's something I'm watching closely because if we are getting an inflationary type environment, I wouldn't be surprised to see this shift, right? We're not there yet, right? We're not going to front run it. The market doesn't care what I think could happen. We only care about what's happening, right? And getting on the right side of the trend. So what I see here is a bearish fund underperforming with mixed to slightly bullish money flow, still in a downtrend, right? Rounding out of an oversold condition. So we'll have to continue to watch this, but I'm not fully there yet on RWR, but on something I'm paying attention to, right? I try to catch these shifts early. Taking a look at what's trending now, Thursday's S&P 500 movers and shakers are gainers and losers. Noble, no real news there, up 7.8%. Akamai caught an upgrade from Cowen to send that stock higher by 6.39%. FTI was upgraded on July 1st, maybe a little bit of a follow-through on Thursday, up 5.36%. FANG, Diamondback, get a little bit of a snapback after being removed from the A1 list at BAML, up 5%. And WIN, gaming was strong, which is kind of interesting in light of the fact that COVID numbers are rising, which I think had an impact on the loser side of the board away from Dish, right? Carnival, Norwegian, VTR, and Royal are all kind of levered to what's going on with COVID. If case counts are increasing, these names are under pressure, right? Dish Network, there was some news around T-Mobile and divestiture of some assets that took that stock down 4.5%. But the other four names obviously are familiar with, levered to what's going on with COVID-19, reopening of economies, and to the extent that rising cases push back reopening plans, these names are going to be volatile, probably with a downside bias. So let's dive into the charts now. So the growth theme is in play globally, right? You've seen the charts of the Qs, right? I've talked about growth over value. I mean, at this point, everybody should be well aware of the trends in growth over value and our opinion of them. But what's interesting to me is how it's playing out globally. Now, I wrote a note last week highlighting the fact that global growth continues to slow and that the growth outperformance theme was picking up globally. You can look at a fund like EFG, but you can look here too. Look at China Tech, right? CQQQ, right? All-time highs on Thursday. Breakout through the $59 level, above the 50 and 200-day moving averages, which are rising, confirmed by momentum as the RSI becomes overbought, right? Now, check out CQQQ relative to the SPYs, right? Topside, potential topside breakout on a relative basis as well. So that growth theme is not just the U.S. And an interesting dynamic that I'm paying attention to that maybe in the early stages is we're actually starting to see outperformance by some global areas of the market, right? So ex-US. So we're starting to see some international outperformance relative to the S&P 500 in the US, right? A lot of it centers on growth, right, which is an enduring theme. But I think it's interesting because for a long time, the US has been the place to be. And if we start to see some shifts, I think that would take a lot of people by surprise because I think the home country bias here in the U.S. is strong. I think the majority of investors, including myself, have the majority of their equity assets invested in the U.S. And if we see a situation that prompts a shift outside the U.S., that could be interesting. It's something I'm watching. Personally, I've actually started to shift a portion of my equity allocations outside of the U.S. As that outperformance has picked up. Gold continues to work higher. Take a look at the continuous contract here, right? Trading near 52-week highs, above the breakout level at 1,700. Momentum remains bullish. I guess if I was going to have one concern here about what I see in the gold charts is the fact that we're not becoming overbought in the RSI on these rallies, right? Same thing happened back here in April. We went into this consolidation, move higher. We're making lower highs on the RSI. So if I was going to try to poke holes in the bullish trend for gold, that's where I would start, right? So it's just it's a warning sign, kind of a flag to say, hey, pay attention. It obviously requires a level of confirmation. To me, that confirmation would be a break of this support level at 1,700, right? That also coincides with the miners breaking down. So far, the miners are tracking gold closely, trading near highs. Take a look at GDX at the bottom of the chart. So the gold miners remain strong. Full disclosure, I am long GDX. I'm also long investments that give me exposure to gold. But I am watching this divergence and what that could mean going forward. And finally, commodities. We're talking about the potential for rising inflation, what that could mean for different areas of the market. I think you want to be paying attention to this chart of commodities, the DB Commodity Index Tracking Fund. I think a breakout through this kind of 1250 to 1275 level could trigger further upside. Momentum looks to be shifting into bullish ranges, and we're starting to see a stabilization in the near term of commodities relative to equities, DBC relative to SPY. So that could have implications for areas of the equity market on a relative basis, I think it's important to keeping up on it. Welcome back, everyone. Happy Monday. I'll be back with you tomorrow.